All right, let's get started. Hey everyone again, my name is Ryan Elgar. I'm an account executive here at Enumerate. Thank you all for joining today, and we're excited to be speaking on the 7 financial pitfalls associations face and how we solve them. Today's speakers include myself, and we also have our VP of Financial Services on the call. Vishnu leads the entire EFS team, and I'll give him a minute to discuss his background and role as head of financial services.
Hey, good afternoon, everyone. Thanks for joining us. Vishnu Sharma, CPA certified fraud examiner. Been practicing in this field for about 20 years now. Very active both locally in the state of Florida and then nationally. Enumerate Financial Services serves some, 400 community associations across the U.S., some 60,000 plus doors. We focus only on community association accounting. We're very active both with the AICPA, the FICPA in the state of Florida, and CAI nationally. So thanks, Ryan.
Awesome. Thank you, Vishnu. And before we jump into the pitfalls, I'd like to take a few minutes to introduce you to Enumerate and our services. Some of you may be familiar with Enumerate's products and services already, but for those of you who are not, Enumerate offers all-in-one accounting and operations management. Enumerate was formerly known as TOPS, which focused on providing accounting software. In 2021, we rebranded to Enumerate and expanded our offering. So we now offer accounting software, community engagement platforms, and financial services. As Vishnu said, EFS, Enumerate Financial Services, serves 400 community associations, roughly 60,000 doors. We have 30 plus years of experience serving only community associations, and we offer full service accounting running on the industry trusted Enumerate software. So next, a poll before we jump into the 7 pitfalls here. If you could quickly reflect on the issues your community association may be facing, and let us know where you believe these issues may be stemming from. Is it 1, staffing, 2, software, 3, management, or is it all the above? Give you all a minute to reflect and respond here. All right. Moving into the 7 common problems community associations face today. These issues, they're mostly tied to accounting and software and not having the right systems in place. So the goal today is to identify the issue, what impact that issue has, and how it can be solved. So for our first pitfall, we have delayed financial reporting. This is an issue because delayed or inaccurate reporting can be a curveball for board members and lead them to making delayed decisions. Without timely reports to review, you can be creating risk and distrust among the board. And not to mention, with changing regulations, it's always important to know where your association stands financially. So, how do we fix this? With the help of software and accounting partners, you can rely on timely report packages and month end workflows built for consistency. Licensing a dedicated system will ensure you have real-time visibility into your financials with the ability to build reports on that data and access prior reports for comparison.
Hey, Ryan. On this particular topic, just a quick call out for everyone to understand
Yeah.
when you have an accounting system should be something that is completely integrated 100% from the time you're posting unit owner payments into the system, maintaining the ledgers, to posting the invoices, issuing checks, and then the creation of the financials should come together as one full package, and it's all done. When you get financial statements from your financial statement provider, whoever it is that's providing that, it should be generated out of the accounting system. If someone is having to go to QuickBooks, is having to go to Excel and create you financial statements at the end of the month, that is a red flag. Because
Mhm.
if your accounting system is accurately reconciled, transactions are accurately posted, you should be able to print your income statement, your balance sheet, all your financial reports should be able to print out of the accounting system. And if for whatever reason it cannot, either you've got 2 issues. You either have the wrong software because you're trying to use a square peg in a round hole, like trying to use QuickBooks to do community association accounting. not built or designed for it whatsoever, or you have the system that you're using is set up incorrectly, and whoever is operating that system doesn't understand how to use it. So what's ending up happening is they're having to do a workaround and create financial statements in Excel, which are only as good as the paper they're written on because they don't tie back to the financials, and they raise the red flag that your actual accounting records are not necessarily accurate, right?
Absolutely. Well said. Thank you. So number two, diving deeper into not having a system with real-time financials. This becomes a problem when boards can't check bank balances, cash flow, or expenses in real time. This matters because without insight into the whole financial picture, you're only being updated when you receive monthly reports. Static PDFs don't show real-time status, and financial blind spots weaken accountability. So how do we fix this? Utilizing banking integrations in software will show you real-time balances, AR homeowner payments made, AP to vendors, and budget variance. When working with us, you can view this with secure cloud access 24/7 from any device. Our software can provide real-time ledger updates for your owners. And for board members, you can even customize the visibility into the financials based on that user's role. And with a software system or a software platform that can offer these things, you're setting yourself up for success with transparent data.
Yeah, the one thing that Ryan's calling out here, and you're going to hear as a theme through Ryan's presentation today, is the term real time. It is 2025. If you're not operating on an accounting system or platform that allows real-time reporting, your board members should be able to all have the ability to log in and see the accounting records, full transparency. They should be able to pull up an owner's ledger, see a delinquency report, look up a vendor history, look up a general ledger detail to understand what was spent in repair and maintenance on a given month, be able to see the actual invoice that transacted in that transaction on the system itself. All that should be integrated into one single software, and that should be real time no matter where they are in the world. They should be able to just log in remotely and be able to see and access that data. Owners should have the ability to see their ledgers online, be able to make a payment online. All of that should be functional, basic, level one type of accounting and expectation in 2025, right?
Next, AR. Many associations, they're still accepting checks from homeowners in 2025. So although some owners may never change to online payments, by offering digital payment as an option, a lot of owners will switch over time. So this matters because manual payments can fall through the cracks, checks can be lost, and that can lead to late fees and disputes. Also, late payments hurt cash flow, and there's a risk of error when logging payments manually. Lastly, manual entry is tedious and it's time consuming, and it's ultimately something that should be done away with in 2025. So to simplify the AR process, you can take advantage of online payment portals with balances and ledgers. Software can also help with the collections and late fee process by using automated official correspondence going out to owners. And lastly, in 2025, it's necessary to utilize those banking integrations, such as lockboxes and on-site check scanners. This can really streamline your process and save you time. Next, I want to talk about manual AP workflows. So if you're still sending checks manually, your vendors can be waiting weeks for payment. On top of that, manually signing checks for approval can delay this even further. So workflows like manually signing and mailing checks are time consuming. And not to mention, this can frustrate your vendors and cause you to miss out on early payment discounts. Chasing AP approval signatures delays payment as well. As I'm sure you all know, it's not always easy to get a board member to sign off on a check in person. Lastly, there's a risk of error when making out checks. Plus, there's also a fraud risk when mailing checks if they end up in the wrong hands. So to solve this, you can take advantage of software to do things like automate invoice coding and payment reminders. You can set up AP approval chains that fit your board's rules. And rather than chasing down wet signatures, digital signatures can easily be applied and built into your AP approval workflow. Also, you can work with an independent accounting solution to send payment for you, relieving you of liability. And lastly, with digital AP workflows, you benefit from a paperless audit trail. Next, oversight and fraud risk. Oftentimes, one person's controlling the entire financial process, sometimes with little visibility into real-time financial data. This is an issue because without separation of duties, you're increasing your risk of fraud. With a single person handling accounting, board members may not be able to see what's happening. And if they're not doing the bookkeeping accurately, this can cause an incomplete audit trail. Financial mismanagement is one of the biggest issues community associations face. The average length of time before a fraud scheme is detected is about 18 months, and this can snowball into much larger issues that are hard to pinpoint in past bank statements. So the best solution here is to ensure oversight is to work with an independent community association specific accounting team. This will stop and deter fraud from the start, and software can assist with multi-step AP approval options for board members, ensuring all payments are viewed by multiple people. Also, you can enable role-based permissions and controls across all parties that transact. And lastly, utilizing a system with an audit log capability will allow for easy oversight.
Enough can't be stressed on this slide, and Ryan's pointing out of the number one risk the community associations have and face when it comes to financial matters is concentrating all of the accounting responsibilities into one person. If you give one person the ability to control all the deposits into the system, payments out of the system, and they're reconciling their own work, even if you're consolidating it into one entity, whether it's a management company or such, there is a strong argument to be made for having independent accounting as separate and apart from whether you're doing in-house management with a licensed CAM or you're using a community association manager, keeping your accounting independent. You should have three parties to any transaction: management, accounting, and the board. And those three-party separation, I'll give you that segregation of duty so that one person is a person who's selecting your vendor, approving your invoice. One entity is the sole entity that is simply posting transactions, reconciling your accounting, and then you have ultimately the board who is the ultimate signer and approver of everything before it goes out the door for payment to a vendor or a contractor. By having those three pieces independent of each other, you've almost guaranteed yourself a fairly ironclad, fraud-resistant business model. It would take collusion between two or more of those groups for you to have an issue going forward. Ryan?
Right. Number 6, we have state compliance issues. The problem here is that boards already have a lot of responsibility, and they don't have time to keep up with ever-changing state laws and statutes. This can be an issue because non-compliance with state laws can result in penalties and fines, and you don't want to be a community association that fails state reserve requirements. With rising costs, it's becoming more difficult to stay on top of reserves. Studies show that 71% of boards plan to increase their fees in 2025 to ensure they are in good standing. So, how can boards be sure they're in compliance? First off, you can take advantage of software that includes bank integrations and tools to be sure you have adequate reserves. Long-term budget planning can also help to avoid falling behind in reserves. Another solution is using an independent accounting team, specifically community association accountants who are up to date with all current state regulations, so you don't have to be. And lastly, you can benefit from software with banking integrations with access to exportable data for your reserve studies. And last but not least, pitfall number 7 is fear of change. So the problem here, switching your accounting or software provider requires a time and labor commitment, and time is something most of us just don't have. Why this matters? Well, my question here would be, what's the cost of staying the course with what you have now? If you're using a broken solution or a non-community association specific accounting system, this can actually cause bigger issues in the long term. Also, accounting just isn't as meaningful when it's not tied to a dedicated software that can help you analyze your situation and provide tools to assist. There are roughly 358,000 community associations in the United States, and most of them do not have the necessary software and accounting partners for a long-term solution. So the solution here is to take advantage of our onboarding assistance and data migration. This can ease the transition process. Also, it's important to ask yourself, am I using the best possible solution and service professionals? If not, then a change may be necessary, even if it's a transition that you don't want to undergo. By enacting change, you're setting up your community for a solution that will last. And oftentimes, the idea of changing accountants sounds overwhelming, but don't let that fear hold you back from making the best decision for your community association.
So just to touch on that,
Yeah.
that fear of change, it's real. The number one question we get from clients is, when should I do the transition? Should I wait for the beginning of the year? And no, the transition can be done any day. Like, we convert clients and onboard them. We ask for 6 to 8 weeks. We've done it in as little as 2 or 3 weeks, depending on whether they have an existing central setup or not. But you can pretty much be converted onto the new platform for services within 30 to 60 days. Um, it's a
Mhm.
new language, it's a new muscle to learn, but there are professionals in the field that you can actually utilize. So when you get with a professional firm, and that firm can actually take care of building your accounting records for you, getting you set up, walking you through that process step by step to make sure it's a easy process. Most of the time, you're taking your ending balances from your predecessor and you're putting those in, and then you're getting records from that predecessor that you're able to go ahead and have in place for historical purposes as you need to, and you're moving forward. The point is, you need to cut the losses that you have and stem the bleeding from what you're having in inefficient or inaccurate or unintelligible accounting records that you have. We've taken on 5 clients, and we're seeing scarily too many of these now, where we're actually having to go back and recreate 5 months, 6 months. The worst was where we're in the process of recreating 1 year worth of accounting records. May 31st was the last time they had a reconciled financial. They've been through 2 accounting firms since then. We took them on 2 months ago, and we're now rebuilding from June 1st, 2024 forward for them. But we're doing that while simultaneously taking them over going forward. So we know the new records are good as of June 1st this year. We just know we have a set number of time that we've got to go back and recreate a year's worth of records for them. It's all part of what we do, but the best part is to make sure that you're just stemming the losses at the time you can.
Right. So to sum it up here, we believe that community associations will shift to specialists when it comes to independent accounting partners. Our EFS team specializes in only community association accounting, and the result of this is one, accurate financial reporting. A professional accounting service can ensure precise financial statements and proper accounting methods, even if the community's finances are complex with multiple funds. Two, better budgeting and planning. Our professionals help develop realistic annual budgets, adjust reserve needs for long-term maintenance, and provide data-driven guidance on dues and assessments. This protects the community from surprise shortfalls or unnecessary increases. Three, stronger financial controls. EFS can introduce internal controls to reduce risk of fraud or errors. By having a segregation of duties and independent oversight, you can help mitigate risk. For transparent communication, a professional accounting service provides clear and reliable reports that the board members can share with their owners. And this kind of transparency, it's going to build homeowner confidence, support informed decision making, and help during audits, disputes, or sales transactions. Five, time saving for the board. By outsourcing the accounting work, volunteer board members can focus on community priorities rather than bookkeeping. Professionals handle the accounting work, reducing stress and freeing up board members' time. So the bottom line here, professional accounting service protects the community association's financial health, reduces risk, and just makes life easier for the board. You can think of professional accounting services as an investment in the community's stability and reputation. So wrapping it up here, my email's on the screen, so feel free to reach out if you're interested in scheduling a call to learn more about how we can help your community. I think we're going to put up a poll for this as well. And I was not monitoring the chat. Vishnu, not
I've got
sure
a
if you
couple
were.
questions. Yeah, Ryan here that let me just go ahead and take a few minutes and reply. Mary, the three parties that should be part of any transaction, that would be management, accounting, and the board of directors, with the understanding that management generally would be in the role of helping select the vendor, define the scope of work, and ultimately approving the invoice for payment. Accounting being the only party that is actually has access and the ability to enter any transaction into the accounting system. So they're the ones who are doing all the posting and all the reconciliation and the production of the financial statements. And ultimately the board of directors, and the board of directors would be the only signers technically on bank accounts, and ultimately the only one who can approve an expense or an invoice for being paid. Um, so that's your three parties. Michael, um, your scenario is one that I've come across many times where an association is blessed to have a controller or a CPA or an accountant that retires or comes to live in their building and then does their books for free for years. And the only problem is when that controller or CPA or accountant decides to retire or leaves, the association's stuck because they've never had somebody doing it. So, Michael, what you would need is you'd need to be able to get somebody professionally to come in and take over and do that, unless you could train somebody on Enumerate Central, which it indicates that your text indicates you guys are using. If you think you have somebody competent to do that, great. If you don't, then it's best to get an outside professional who can come in and take over the association's books, and they can work right in Central. You just need to get somebody who's knowledgeable on Central, and they can come in and take over right on Central. So the association's books are maintained. What you don't want to do, or you would try not to do, is break up the books, because if you bring in somebody from the outside, they're not familiar with Central, then you're going to lose your historical contiguous data. You would have a data set in Central, you'd have a data set in something else. And what would be worse is if somebody else comes in and they bring in a non-community association software, such as a QuickBooks, where you're now stuck. Yes, you can get with support if you're existing Central customer, and support would be able to help guide you on how to go ahead and grant access to your other board members. I would recommend that if you're going to give other board members access, give them read-only access, so they do not have the ability to change anything. The worst thing you would want is for somebody to decide, go in and start waiving people's late fees and or applying charges or doing some other craziness to your books. There's no integrity to financial statements unless there's a control over who has access to make changes to those financial statements. Ryan, I think that's it for the questions.
Awesome. All right. So I'll leave you all with our upcoming webinars. We have one on the 20th, the Enumerate Virtual Summit. So looking forward to seeing you all there, and thank you all for joining.
Oh, Ryan, sorry, one quick thing. Sorry, Michael had asked, how are they going to be able to view this? Because he wants to be able to share it with the rest of his board.
Oh yeah, so everyone will get an email with this recording sometime tomorrow.
Terrific. So, Michael, once you get that recording, you can forward it on, and it should be easily accessible to the rest of your board members. Thanks, Ryan.
Thank you, Vishnu. Thanks everyone for joining. See you next time.